Thank you very much for the invitation, and firstly, congratulations to AIFA. I think fantastic event, Krishna sir, Ramesh sir. It's brilliant to see the number of people who are here on a Saturday morning. Very kind introduction as well from all of you. Very happy to be here, and I would say our journey is a short one so far. We have many more miles to go, and I think with all of your support, the miles will become easier to travel. But what I thought we'll share today, beyond just the numbers, beyond the market outlook, is how have we, as Bajaj AMC, as one of the newer entrants into the market, how are we seeing the market? How are we trying to differentiate? When there are already 40 other AMCs, right? How do we come in as a new AMC and try to create something that is unique, something differentiated, so that we bring a new flavor, a new spice to the market? So the first question that I was asked personally when I took over this role is, why did you decide to enter now? Right? Why not many years ago? Right? And for us, quite a lot of things had changed in the market that we had seen over the last few years. First, India had crossed a very important milestone of GDP per capita of over $2,500. This is a very important number, and I'll ask you to keep that in your mind for a few minutes, because I'll explain why this is so important. Second, technology was really beginning to change quite a lot. With India Stack, with Aadhaar, UPI, what was happening also with Open, ONDC, a lot of new frameworks were coming that were allowing technology to be used in a very different way going forward. Plus, what we were seeing is, with the entire emphasis on mutual funds sahi hai, the retail participation significantly increasing, we were seeing a significant growth opportunity in the mutual fund space in India. In fact, I keep telling all my distribution partners, we are very fortunate that we are born in India. We are very fortunate that we are born in India and at this time. We are very fortunate we are born in India at this time and in the mutual fund industry. It's a fantastic place to be, and I will try to explain why. So first of all, we talked about the fact that India has crossed $2,500 GDP per capita. Why is that important? We looked at a couple of other countries that have gone through the same story. Thailand and Malaysia. Right? In Malaysia, 1991, their GDP per capita was around the same level as India. And by 2004, it took them 13 years to get to about $5,000 per capita, which is what we are going to be doing in about the next 6 to 7 years. Thailand did the same thing in 2004 to 2010. So it took them 6 years. So GDP doubled. But what happened to mutual fund AUM? Mutual fund AUM, you will see on the second last row over here, increased by a factor of 3.5 to 4 times, which means mutual fund AUM as a percentage of GDP increased by 4 to 7%, right? Even when GDP was growing very fast. And that happens because people then have a little bit more money. They want to have a better home, a better vehicle, better schooling for their kids. And they want to invest because they're seeing their future is being brighter than the past. So this is one which we are seeing a significant opportunity that is coming up for India. What is also happening is the income and consumption structure in India is going to change. Sorry, I think there's some feedback that's happening. Yeah. Between 2022 and 2030, the major change that is going to happen is the number of households that are in the upper middle income as well as the high net worth households. This is going to significantly increase. So we are anticipating almost 200 million new households, 20 crore households will be investment eligible going forward. Out of which, how many are investing in mutual funds today? 4.5 crore. Right? So this is a factor of almost 4 to 5 times that we can see a significant growth opportunity. Because of all of this, we were seeing back in 2023 itself, we had predicted that the market will reach close to about 130 lakh crores by 2030. Nobody believed us, right? At that time, market was how much? It was around 40 lakh crores. Most estimates were saying that we'll probably get to around 100 lakh crores at that point of time. We were saying that this can easily get to 130 lakh crores. So our prediction was in FY25 we will probably reach around 55 lakh crores. Today we have already crossed FY26 numbers as per the prediction. Right? So chances are even this may be an underestimate, and the opportunity is very much in front of us. So we are clearly seeing a significant market growth and significant opportunity in the entire industry. The second question then comes, okay, but there are already 40 other players. Is there room for one more? So I keep asking people this question, and I'll ask this room as well. Do you know how many AMCs there are in the US? Any guesses? Sorry? 500. It's close to 6,000. There are about 3,000 listed companies in the US, less than India, but there are 6,000 AMCs, right? But forget US. US you can say is a very large market. UK, 1,100 AMCs. Singapore, 1,000 AMCs, right? A small city state. So who is to say for a country like India, 1.5 billion people, what is the right number of AMCs, right? So what we are clearly seeing is as long as an AMC has a strong brand, because people are investing, they're deploying their money with you. B, differentiated products, something that is unique. And C, if they have strong digital-led processes that allow distributors and investors to easily invest with them, India can have many more AMCs as well. So like we said, mutual fund industry in India, very fast growing, space for a differentiated player. It has economies of scope as well. So once you start a mutual fund business, you can do PMS, you can do alternates, offshore, and it's also a very high engagement vehicle. And you see that with all of your investors. Some of them check their portfolios even twice a day. I don't know why, but sometimes they do, right? So when we came into this industry, we said that there is a very different thing called a last mover advantage. Right? Now, what does a last mover advantage mean? It means you can start with a clean slate. You can question everything. You can look at global Indian best practices. You can see what has worked, adopt those, see what has not worked, discard those. You can completely reimagine processes. Yeah. Little up? Okay. Is that better? You can completely reimagine processes, and you can rethink about what is the future version of these processes that make sense. And essentially what you're doing is you're building for the future. So that was the approach that we fundamentally did. Right? And so when we launched the business about a year back, the market expectation was really, Bajaj Finserv is coming, kuch alag karega, meaning it will do something different. Right? So what was it that was different? Let me just play a short video and hopefully that will explain it to you. So what you would have seen is three major pillars on which we are driving our differentiation. One is innovation. How do we do something that is unique, better? Second, how are we building win-win partnerships for all our ecosystem partners? And third is, how are we building for the future, building future-ready company? Right? So let us talk about each of these a little bit more. And since innovation is very, very critical, and this is the business of investment, we said innovation must start from the field of investing itself. How can we differentiate starting with the investment philosophy itself? So we asked our investment team, right, what are all the sources of alpha and what will drive alpha in the future? And they came back with three broad areas through which you can generate alpha. We call it InCube: information edge, quantitative edge, and behavioral edge. Information edge simply means you have better quality or earlier information than the crowd on the companies or securities that you're investing in. Now, this used to be an advantage some years back, but now information is ubiquitous. It is easily available. So now it gets you to the race, but it won't make you win the race. So the second edge which becomes important is the quantitative edge. Quantitative edge means how do you analyze that information? What are your tools, your quant models, etc. That certainly there is room to differentiate in this industry. But my own guess is, with the way AI, tech, data is evolving, models will become also ubiquitous in the next 3 to 5 years. So if everybody has the same data, everybody's models are also copied, then how do you generate alpha? That is where the third edge becomes important, which is the behavioral edge. Behavioral edge means how do you take better decisions based on the same information and the same models. And this has two broad aspects, but what we do is we actually take the entire investment process and we put in specific tools in each of these cases to do one of two things. One is either identify when the market has over or underreacted and take advantage of that. Second is how do you put in your own processes some things which help minimize the bias of your own investment team. They are also human beings at the end of the day, right? How do you minimize the impact of their own biases in the field of investment decision making? Now, what has that achieved, right? Ultimately, the proof of the pudding is in the eating. So we actually just listed a few calls that our investment team had taken. And a lot of these you will see are calls that have been made in the last, I would say, 9 to 12 months, right? Which is really when we've been operating. So more recent calls, all of you will be quite familiar with these. So the first one was, when we launched our FlexiCap, which is a mega trend based strategy, right? And we were clearly seeing that power is going to be something which is very, very critical. If you think about the two biggest two-letter words that have dominated everybody's headlines, it is EV, AI, right? Both of these are heavily power-centric. AI, there are some predictions which say that it will take up almost 10% of the world's entire power supply. 10%. Imagine that, right? So we are extremely bullish on the power sector. But here what we are seeing is, more on the power ancillaries, etc. We are seeing a clear opportunity. And you can see the outcome of that as well. Second, we were seeing gold. We see, of course, as a good inflation hedge, event hedge. It's a good goalkeeper in the portfolio. But it's also been actually seeing a lot of good underlying drivers, primarily driven by Chinese central bank and household buying. So that also we were seeing because we were seeing fear in the market at that point of time. Right? The rate cuts, I think that was also something which we were clearly looking at. We launched a banking PSU fund at that time. We were seeing the move from cyclical and value towards quality. And what you can see is from the time when we did the call, momentum has moved by about 4%, quality has moved by around 10%. We have already been shifting our portfolios towards quality, towards large cap in advance of this. The large cap part I also talked about. PSUs, we've been underweight for the last few months, right? And I think that has also been a call that has been taken up well. And FMCG and pharma are what we are seeing as very interesting calls at this point of time. And in the last 4 months itself, you will see the kind of returns that these sectors have been generating. But there are some very strong underlying reasons for that. Pharma with the US Biosecure Act, I don't know if you have all been tracking that. There is an act which has been passed by their parliament, which is now going to go into their Senate. It's gone from Congress to the Senate, which basically means that US is going to start de-risking itself on its pharma supplies from China. They want to minimize that. The biggest beneficiary of that is going to be India. Right? So we clearly see that. We see a strong consumption story coming up as well for India. So we have positioned our portfolios accordingly, and you can see that across the last 1 year, multiple calls that we have taken have proven beneficial. So this I already talked about, I'll skip this. Now a lot of distributors ask us, so what should we do, right? Market is doing well, industry will grow. How should we benefit? What is in it for us? And what would be the 2 or 3 big things that we should all be thinking about? So the first one that I keep telling all our distribution partners is you have to digitize, right? See, if your margins are reducing, and in this business it will continue to reduce. It's true for you, it's true for us also, right? As volume increases, your margins will keep shrinking. We see this in business after business worldwide, right? But if that is happening, your revenue is not only your margin. Your revenue is actually comprised of margin times volume. So if your margin is decreasing by 10%, let's say, can you grow your volume by 4 or 5 times? But while growing that volume 4 or 5 times, you should not be adding your cost 4 to 5 times. To do that, the only way you can do it is by using technology. So please move away from physical check-related processes, move more towards digital means, use technology, use the UPI stack. All of these things the government itself is providing us. We should be the first to use them. The second thing is, how do you diversify? So it's not that your investors need only mutual funds every single day, right? Some days they may need an FD, maybe a home loan, a credit card. So how can you use all of these opportunities to build deeper relationships with your customers, provide them all of their products, and also, by the way, when you do that, your own business model becomes stronger because you have now multiple products that you can sell. You can have different revenue streams. Some are upfront, some are trail, some are commission, some are based on transactions. So your own business model becomes more bulletproof. So these are things that all of you in this room have to do in the coming years to take the full benefit of what is the market providing you as an opportunity. Now to do this, you have to ask yourselves a few questions, right? Because in most cases, you will probably end up working with an AMC partner to develop this. Right? So the questions you should ask yourselves are, is your partner helping to create digital, seamless, intuitive processes that help you? Right? Second, are they helping you to grow your business? Third, are they helping you to combat online competition as well? Right? Now, I'll just play a short video which will explain a little bit of what we are doing on the WhatsApp front, because that's something very unique.
Mutual funding.
So what you'll have seen is on WhatsApp, you can now do all transactions. lump sum, SIP, redemption, non-commercial transactions, everything. What started 1 year ago as an empanelment journey now is full scale. Right? It's available to all our partners. And an interesting story. So some of our partners, they had actually gone to Kazakhstan for a life insurance convention. And from there, they're doing transactions. Right? Because now you're not limited by where you are. As long as you have your investors' PAN details, you can do transactions from anywhere. Right? As I said, there's also functionalities like a custom QR. You can make a QR code for yourself, whether it is for a scheme specific or a non-scheme specific, a generic QR code as well. All of these are possible for you to do on your WhatsApp. Right? So what I would request is for everybody, please use this facility. It's a very important facility. All of our product information, CIO videos, podcasts, everything is going to be coming on WhatsApp. The number I have also showed over here. Please store and save this number. You can just drop a simple hi on this number, 97652 96666. That will start the entire journey for each and every one of you. So I would request all of you just please store this number as well. As I said, all the new initiatives like Information Vault, all of these will come on WhatsApp. Custom QR has been something which a lot of our distributors have already started using. Please take advantage of it. Particularly during NFO times, it is very, very easy. You can just send a simple QR code to the investor, and through that the entire journey can be completed very quickly. So all of these initiatives are about getting you to be more efficient, use digital technologies, day-to-day technologies to run your businesses much faster. Right? With Empower, now we have started something where we heard our distribution partners, and they said that we have some companies for which the employees can we provide them a simple solution to do SIPs in one shot, and the employee company's HR basically deducts it before it comes into the customer's bank account. And as long as employer-employee relationship is there, we can accept third-party payment. So that is something again that we have launched. It's a great, I would say, feature for many employees, and making people invest before they start spending actually is a great way for people to build wealth also in the future. What we also do is to make sure that we are training all of our distribution partners on behavioral finance. So we have every Friday evening, we run a simple session where we typically will have one of our, maybe an external speaker, maybe an internal speaker. It's a very well attended call. I would request all of you please also join these. They provide you every week at least one new concept. Sometimes it's about behavioral finance, sometimes it's about GST, different topics. Right? But we also run a full-scale workshop and a certification program on behavioral finance. So Bajaj Finserv, you can equate with behavioral finance. The third is coming to online competition. Right? Now, online competition is not only in our business. We have seen this story before. We have seen this movie play before. Where? In the consumer durable space. Right? Think about it. These are some of our partners in the for Bajaj Finance. Right? You have Vijay Sales, Chroma, Reliance Digital, many smaller durable shops as well. Think about it. For each of these players, right, you have to have a big store. You have to have it in the center of the city because you want footfall. You have to store all the products, TVs, refrigerators, washing machines, takes up a lot of space. You have to have knowledgeable people in your store because you have to explain all these features. Who is their biggest competition? It's online. Think about it. Somebody comes up, prepares an app. From home itself, you can start swiping on the app. You see all the product features, functionalities. You select, you pay. Warehousing is somewhere outside the city. Right? Product gets delivered in 3 days. How do you compete with something like that? That is the question which our distributors came and asked us. So we did a very simple thing. We first did an analysis, and we found that one major product is what sells on e-commerce: mobile phones. 70% of commerce in the country, even today, is mobile phones, right? So what we did is we basically got all our distribution partners together and we said we have a property called Bajaj Mall, right? On which we get about 20 crore visitors every month. All of these customers have their EMI card already with us, right? Can we actually then get all our retail partners to put their mobile phone catalog on this property, right? Now, think about it. Next time when a customer comes to this website, he's simply scrolling through, decides to buy a mobile phone. We know which pin code he is coming from. We make only those retailers who are in that pin code visible to him. Customer makes the order, pays using his EMI card, very seamless transaction. It's the retailer's responsibility to deliver. He can deliver the product within 3 hours. Not even Amazon can match that. That is how we bring our technology, our analytics to the benefit of our partners in every single ecosystem that we play in. Now that's about technology. But ultimately in this business, it's about products, right? You will know us as a manufacturer of products, and as a manufacturer, I must explain how are my products differentiated. So we did that in every single fund that we launched. For us, any active fund, we said the key benchmark is the competition, right? So my active fund has to have a reason to outperform the underlying passive, right? So we started with our research to say what are the weaknesses of passive that my active fund should compete with. And turns out there are two big weaknesses of passive. First, passive cannot look into the future. It can only look into the past, right? Companies come into the index when? After they have performed. And companies that are in the index but underperforming, index will still have to continue to invest till they fully exit. Now this is a downside of passive which my active fund should compete with. So that is why we came up with mega trends as a strategy. Mega trends basically mean, are there some major trends which are going to impact companies, countries, businesses, economies, and drive growth for them in the future. So it is a way to predict what can be companies that can grow well in the future. So here we simplified it and we call it technology changes, regulatory changes, economic shifts, nature or environmental changes, demographic changes, and social changes. So very simple, TRENDS. If any of these are in your favor, chances of your growth is very, very high. Right? Now what we do is every month, and this is again an industry first, we take our entire portfolio and we display this regularly, right? And we show you which TRENDS this company is benefiting from. It's a lot of extra work, right? But why do we do this? To build greater conviction with you, with our investors, that this is the right portfolio that we have built up and why each company is there in the portfolio. Third thing that we measure is active share. And this is something all of you should measure regularly with all your funds. If you are an active fund, right, it must have high active share. If it has low active share, it is mirroring a benchmark. Only if it has high active share and a good process can it generate alpha. So this is something we tend to do with all of our funds. The second weakness of passive that we found is it does not focus on quality of companies. Right? Whatever the company is there in the index, it will invest. But we have found that good quality businesses run by good management, with good governance, they can actually outperform in the long run. Right? They protect their profit pools for much longer. That's why they get better multiples. Right? So that is where we came up with the moat-based strategy. It's actually a concept from Warren Buffett. But we came up with this from an Indian perspective. And even here, what we do is we show our entire portfolio of companies that have built strong moats to defend their businesses. Right? And this is again a strategy where we focus on what our active share is. It's one of the highest in the market at 66%. Right? The Balanced Advantage Fund, again, for the first time, we brought a differentiated approach where we said there is a fundamental model that has 70% weightage. but there's also a sentiment indicator. Sentiment is very important for us to understand where the equity markets are at any point of time and should we be allocating more into debt. And here we use indicators from currency markets, commodity markets, bond markets to help drive our view on this. The interesting thing that this has done is the model is actually giving us the right calls. So every month, what we publish is what is the Nifty indicator and what is the sentiment indicator. Every month you will see this in our Balanced Advantage Fund portfolio. Right? What it is showing is Nifty at fair value, above fair value, or below fair value? Second, what is the sentiment indicator? Positive, moderate, or negative? Right? Based on that, you will see what is our percentage equity allocation with this 70-30 model. So this is the best way for you to understand what is our view on the market at this point of time. Multi-asset, again, we brought a very differentiated approach. We brought something called a GDP strategy, growth plus dividend payout. Right? Now what that does is you get a very excellent portfolio. You get companies that are giving dividends, so they're profitable, stable businesses, you have good quality businesses, accountable management. When you pair that along with growth, you actually get an excellent portfolio of IT, FMCG, banking stocks, energy stocks, many good companies, but you also get the benefit of dividend under the mutual fund structure. You get the debt returns, again under the mutual fund taxation in equity, and you get gold as a good goalkeeper in your portfolio. Plus, this equity portfolio you get at a discount to Nifty today. So you have a fantastic product which allows people to participate in equity markets at today's rates with a good equity portfolio, but also protects them on the downside with dividend yields, fixed income returns, and gold. So you get a 3 to 4% cushion on the downside for every single investor as well, which can grow. Large cap fund, we actually launched one of the most active, high concentrated large caps in the market. See, large caps, the major issue is it's very difficult to outperform in this category because you have only 100 stocks, very well researched. Out of these, maybe 10, 15 you may not decide to invest in for different reasons. So you're left with 85 stocks. Now, within that, if you're creating a portfolio of 50, 55 stocks, you're almost creating an index itself, right? So what we did is we actually came up with a concentrated portfolio of about 25 to 30 stocks. It achieves the entire differentiation and risk adjustment that you want, and it creates active share of more than 60%, which is what we're looking for in every single fund of ours. Obviously, you've seen the valuation story. Large cap is certainly much more attractive and right valued at this point of time. So we clearly see this as the right product that we want to launch. In fact, some of the media people told us that this is the product that the market has been looking for as well. Right? So for us, it's certainly something that we focus on quite a lot, bringing the right products for investors at the right point of time, even if the flows may not be in favor. Right? And finally, we'll be launching a consumption fund. So this is a fund where we are seeing that in the next few years, as India's GDP grows from $2,500 to $5,000, Indians will consume more, right? More of the same products, but they will also consume better, right? They will consume more premium products. Think about your early childhood days. We used to only have Parle G, we used to have only Marie biscuits. Now we talk about cookies. We talk about premium cookies, right? So people will start consuming more premium products, more luxury products. Indians will consume well, which means products which are more organic, lesser pesticides. And Indians will consume more easy, which means products with more convenience, more home delivery, more through digital and using credit. So all of these are going to lead to certain categories growing very, very rapidly in the coming years. So consumption is something that we see as a very important product for the future. And that actually will see significant re-rating like we have seen in China, where in China so China crossed $2,600 GDP per capita in 2006 or 2007. Since then, it actually grew by about 3.5 times in the next 10 years, right? And you see across multiple countries, Germany, Japan, Korea, you see a ratio of at least 3 to 5 times. The ratio has changed in the subsequent 10 years. That is what is going to be the story of India in the coming years. And I invite all of you to participate in that. Thank you very much.
Thank you very much, Ganesh ji. That was indeed a very, very vivid presentation about Bajaj and the way how they are embracing technology. Well, one good thing what he said was they do not have a dedicated app. They use WhatsApp, which is the mother of all apps. Now, can we have the entire battery of Bajaj AMC in Kerala to kindly come up on stage? Can we have Mr. Anantaraman, Regional Business Head, Tamil Nadu and Kerala, to kindly join Ganesh ji on stage? Calling Mr. Prasanna Kumar, Cluster Business Manager, Kerala. Calling Ajmal Irfan, Business Manager. Aishwarya Krishna, Business Manager. Rajesh R. Trivandrum, again Business Manager. Sharat Nair, Business Manager from Thrissur. Srijit AC from Kozhikode. Bibin Peter from Cochin. Setu SL, Business Manager from Kottayam. And the savior for all of us, Mr. Akshay Unnikrishnan, Operations Manager. Can we also have the President of AIFA India, Mr. Jagadish Pai, to kindly join Ganesh ji and his team on stage? Well, like I said, just after the presentation by Mr. Sandeep Tandon of Quant, that putting up a show like this is not all that easy. We have one very fine gentleman whom we call as the Rahul Dravid of AIFA, the wall of AIFA. So President wishes to give away the wall of AIFA recognition through Ganesh ji to none other than this fine gentleman whose name is Mr. Rubens Prem Samson. He is our Khajanji. He manages the finances. He meticulously tallies every single Naya Paisa debit or credit and sees that the balance sheet is tallied. Mr. Rubens Prem Samson. Last but not the least, whatever we give to Ganesh ji is not enough, but a small token of appreciation from AIFA. I take the opportunity to hand over this small memento to Sri Ganesh Mohan. Now we will have the lucky draw from the side of Bajaj Asset Management Company. We have 3 lucky draw prizes to give away, correct? The only condition, the prize winning person should be there in this room. No proxies allowed. So can we have Ganesh Mohan to pick up the first lot?
ARN 38467, Binu Varghese.
Can we have the next lot to be picked up by Ganesh ji again? No problem.
ARN 149937. Person is not given their name, but they've given their phone number.
ARN 149937. The person has not given his name. He has given his phone number 149993. No. He should be present in this room. Okay, so we are cancelling this. Ganesh ji again.
Mr. G. Ravi, ARN 27753. Easier.
Mr. G. Ravi. One more.
ARN 166443, Parvati.
So thank you so much. You see the battery of Bajaj AMC being led by Ganesh ji, Anand ji, and Prasanna Kumar, the entire team of Kerala, the Tamil Nadu and Kerala head, and the big head of Bajaj.